Hi, everyone. This is Phil Blancato. I'm CEO and President of Latimer Thalman Asset Management, Chief Market Strategist for Mosaic. Welcome to another weekly Market Impact. Well, hopefully you had a wonderful Thanksgiving. Gosh, it goes by fast, doesn't it? What's kind of fun right now is, we're watching the craziness of the holiday season kick off. The Rockefeller Center Christmas tree gets lit up this week. I'm not going to be in New York City. I happen to work right around the corner from it. So it's going to be absolutely crazy. 140 million people were shopping over this past weekend. Can you imagine that number? 140 million people. Wrap your head around that. Let's go one further. 78 million people will more than likely go online and buy some today for Cyber Monday. Wow, it really is quite incredible. We hear so much about the demise of the U.S. consumer, and yet here we are in the throes of holiday season, and the numbers sound pretty good to me. I mean, they're really not terrible at all. Will we spend $1 trillion this holiday season? Forgive me, I'm trying to organize my notes a little bit today. It really is quite incredible to think that we might just spend $1 trillion. That's a pretty mammoth number. And if today turns out to be a $78 to $80 million Cyber Monday, that would break a record. When we look at over this past weekend, the number of consumers hitting, it may top 187 million customers just this past weekend. So Thanksgiving, we did a fun research report on this. I mentioned this a bit last week that turkey prices were down in most places year over year. Other things were still flat to up, but by and large, your Thanksgiving dinner was lower than what it was before. Remember, the lasagna comes before the turkey. I had a lot of questions about that last week. That's just something my mom and dad started many, many years ago. We're obviously a big Italian family. So we always have lasagna first. That's how we do it. And to make it more fun, this year we had 3 different pasta dishes to start. My mother-in-law made her famous baked ziti because that's what she likes. My niece doesn't eat meat anymore, so her lasagna is a vegetable. And I made the beef lasagna. Mine has 3 meats in it. And it came out really good. I was very proud of my lasagna. But even more so, my turkey was spectacular. I took my time. I opened up the skin between the breast and between the skin and the breast. I filled that cavity, filled all that area with butter and garlic and different seasonings. I put citruses in the cavity of the bird, not real stuffing. That's a waste of time. Onion, and then I put in some apples, some lemon, some orange, different seasonings. Then covered it with olive oil, salt, pepper, slow cooked it on the grill for 2.5. Actually, mine ended up just being about 3 hours. It was a big bird. Breast down first, then rotated over, breast up, outside burners on, and voila, a wonderful Thanksgiving turkey. Then I got to do something really fun. I got to spend a lot of time with the girls. We go down and cut down our Christmas tree every year. That's a family tradition. We've been doing that for a long, long time. We are a Fraser fir family. So we went down, the 4 of us, and cut down a Fraser fir. It was absolutely beautiful tree. So very excited to do that. Then we put the tree up, and I headed up to my father's Pennsylvania house in Pennsylvania. We have an annual tradition of getting together, a bunch of us. There's, about 15 to 20 of us any given year, family and friends. And it's a long-standing trip that all the guys get together. And we come up there and spend time in the woods. We do some hunting, not a big deal. It's really not really why we're here. It's the camaraderie. That's something we've been doing since long before I was born. And even though my dad has passed, I still have my great uncle Alfonso Chulo here, and he's one of these most amazing people, like my father. But anyway, we all get together and we cook and we eat and we have a wonderful time. I'll be heading back today to New Jersey because we're going to get snow tonight in Pennsylvania, and getting out of here with 8 to 10 inches won't be fun. Even in the New York area, you might get some snow. But you might have noticed something about me today that's very different. Scruff. I never have scruff. I don't like scruff. But I thought for fun, why not for the podcast? The one time I would do it. Anyway, I hope you had a wonderful Thanksgiving. Those Georgia Bulldogs keep rolling, though they didn't look very good. But now we get the unfortunate benefit of having to play Alabama in the SEC final. Oh, Alabama should have lost to Auburn. Auburn had them beat. Their Reese helped out Alabama way too much, in my opinion. But once again, Alabama versus Georgia in the SEC final. Nothing ever good comes out of it for us with this thing. But you never know. It should be fun. Well, hopefully the kids will play well and Gunnar will do better than he did last week. You guys must be sick of my Georgia Bulldog updates. But a lot of really good college weekends. That catch one of the kids from Rutgers made. Oh my gosh, incredible. Good for Rutgers. I'm a big Jersey guy and I'm happy to see them. I like Penn State. Was happy to see Rutgers hang in there with them. But it's fun times, all the great sports and the family and the fun and the festivities, the lighting up the Christmas tree, our tree going up at home. I didn't do the outside lights. That's coming. This weekend I got to do the outside light. All right. So as I mentioned, just a few things that the consumer in the United States still continues to be healthy. And there was this interesting report over the weekend that they thought the poverty line in the United States is $140,000. Well, that's silly. For a family of four, the average income today is $110,000. When you look at the average median income, it's closing in on $70,000. The poverty line in the United States officially is around $33,000. And when you look at the definition of what poverty is, I mean, there's a lot of really interesting things like cell phones and TVs and cars. The reality is the United States is in excellent shape when it comes to the U.S. consumer because we're still gainfully employed. And we know that right now the consumer, as I mentioned already, is going to spend prolifically, whether today being Cyber Monday or in total for the holiday season. We talked a little bit about it a few weeks ago about how much we spent on Halloween and back to school was above expectations. When the U.S. consumer spends, we hang in there. And the reality is everyone's getting a tax break next year. Almost regardless of what bracket you're in, a bit more, I think, for the wealthy and for corporations. But remember, the folks who make less than $100,000 right now don't pay any corporate taxes, don't pay any taxes, excuse me. So really, the reality is with the SALT taxes going higher and money being saved on Social Security, money being saved on tax and tips, overtime hours, and then obviously what's happening with corporations, the ability to deduct any expenses right out of the gates, really quite impressive when you think about growth. And for that reason, you're looking at quite impressive growth for our ability to grow manufacturing in the United States. But more importantly, will the U.S. consumer hang in there with lower taxes and still gainfully employed? Now, I'll get back to this in a minute, but I did see something. I'll talk about it now. We did see something quite fascinating over the weekend. And what it came into was when you look at what AI has done, AI has done some pretty interesting things. There's no doubt about it. We're seeing most companies adopt it and get real productivity gains from it. But one of the things we did pick up on is that what AI has basically done so far is that, and now granted, AI is still relatively new, but real wages since 2016 have increased by about 7% per annum, which is really quite impressive. But earnings per share has increased by 71%. And why is that so important? That's important because what you're seeing is basically the extension of AI in a world where we already had really good productivity. Productivity has been increasing. Productivity should make everybody more money. Ultimately, if you're more productive, you're earning more money because you're producing more. But what we've seen so far is that AI is supportive of productivity, but it's also supportive of profit growth. And while wages have been up, it's really wonderful when you think about that number, that real wages adjusted for labor productivity are up. But ultimately, the real benefit of productivity so far has been in earnings per share. So while wages have been above the rate of inflation, what we're not seeing is a huge wage boost beyond what we've seen because of increased productivity. But what we are seeing is earnings per share, how much companies make, go higher. And why is that so important? That's important because ultimately, when we talk a lot about stock market valuation and the stock market not being cheap. When you think about how expensive the stock market has been, it is in that reason that I want to see more earnings growth to justify where the stock market is at. So the latest round of data suggests that AI could in fact significantly boost when we think about the revenue that companies make because they're more productive, which ultimately should mean better wages. Now, remember, 7 out of 8 of the last 10 years, wages have been above the rate of inflation. It's a very important part. That's why consumer spending, to where we started today, is really quite good. But with expenses still being high, we know inflation has been tough. We have this sect of people, about 100 million people, are still just hanging on there. To get them to where they're not just hanging on and spending more and having more babies, which we desperately need, then we need to see AI not only be good for corporate earnings, but good for our earnings. And so far, it's been more about corporate earnings than our earnings. Got that? Real important. So in other words, corporations are benefiting more from AI today than us as individuals. That should switch. That should translate down. Another fun piece I picked up over the weekend, as doing some research when I had some downtime, was that when you look at goods and you think about how much of the goods out there are actually beneficial to being money going overseas. So, for example, when you buy appliances today, 38% of the profit from those appliances go overseas. New cars, 31%. Remember, a lot of stuff's made in Canada and Mexico. Self-care, 29%. Apparel, 29%. Electronics, only 25%. Now, this is the profit, not where it's made, 25%. Furniture, 22%. Jewelry, 20%. And finally, not everything else around 17%. So as the U.S. consumer spends, this is a very important point, the whole globe benefits. So recently we added international stocks to our portfolio. We haven't had international in a long time. Why? Because at its core, when the U.S. consumer spends, it represents 25% of global growth, 25% of global GDP. And that's really important because as the consumer spends, the globe grows. The old saying is, when the United States sneezes, the rest of the world gets a cold. That's still very true because we're the biggest economy in the world. As our consumer grows, we grow. We now produce a lot of oil. Our number one manufactured product today is agriculture. Our number two is manufacturing. So when it really isn't about the stuff we make, it really is about as us, the consumer. As long as the consumer stays gainfully employed, we don't have a big layoff scenario or a slowdown in the U.S. economy, the globe should begin to grow at a fairly steady pace. That's a very important point, which is why we added international stocks to recently, because we think the globe is going to grow. Now, when you look back at the last week, we saw a really strong week. Well, we really did finish quite high. But for the last month, the NASDAQ is down 1.5%. So when you look right now, the S&P's clawing back to almost all-time highs at 17.81% on the year. The Dow hanging in there, up 13.88. And what's interesting is value stocks have closed a lot of the ground on growth stocks. So for the week, value lost by about 0.5%. But on the year now, because for the month, value did better, growth stocks were up 19%, value stocks up 15%. You know what we saw last week, which was quite impressive? Small cap stocks up 5.5%. Why? Because the expectation that the Federal Reserve will cut interest rates now is better. Recent comments by Fed governors are suggesting that because the U.S. economy is just hanging in there, and recent labor data has been fairly weak. When we look at some of the kind of off-cycle data, things that we don't normally look at, that's been fairly weak. Why is that important? Things like ADP, Challenger data have suggested that the labor market is weakening a little bit. We finally started to get weekly jobless claims again, and those are doing okay, hanging in around 220,000 people per week filing for claims, but continuing claims, pushing up around 1.95 million. That's a lot. That's not as high as we've been post-pandemic, but it's darn close. That number breaks 2 million, we got a problem. And this week, everybody, we get labor data. Now, the data is old. We're not going to get November data. We're going to get October data, or are we actually going to get September data? It's confusing as all heck. Some of it's a combination of both. But we'll find out if there is any real weakness in the labor market. But the underpinning suggests that so far, tariffs have not really caused any broad-based inflation. Minor pockets here and there. And then more importantly, the U.S. consumer, while hanging in there, there is some concern about overall weakness at the U.S. consumer level. And for that reason, I do think it's quite important that we look at what's happening with jobs this week and assume that it's going to come in relatively flat, which means that the Fed cuts rates, which is why the market rallied. The market is still overly dependent on what's happening with the Federal Reserve, too much so, sadly too much so. So for that reason, I look at it and say, okay, the Fed should eventually get out of the way here, hopefully by mid next year, if not sooner. But for now, this idea of a reprieve, an interest rate cut once again, that would mean the total cuts to this point would be 1.75%, taking nearly 2% out of front-end interest rates. That's pretty significant, and that's why small caps are rallying. But I did notice that we're starting to warm up to international stocks, and they were up 3.26% last week too. The bond market had a pretty good week again. The bond market was up 0.38, whopping 7.46 on the year. So when you look at all the data, it clearly suggests that, we're having a darn good year. In the end, the consumer spending so far is pretty healthy. We're seeing some real interesting scenarios play out at the consumer level. We're not seeing a lot of breakage yet. Now let's see. We're going to get a lot of data here. Let's hope all the data comes in supportive and we get this rally into the end of the year. At least just hang on. I don't think we need to add a lot more. Some fun stuff about tariffs. There was the I'm sorry, AI. Forgive me. What's the matter with me? The World Trade Organization came out and talked a little bit about what's happening with AI and how real it is. So, according to the World Trade Organization, when looking at the global economy, how much it will impact. So, the top performing tech stocks, how much will they mean for the global economy? Are they impacting it? Yes, they are. Clearly, the answer is yes. Last month, the WTO noticed that when you look at trade volume, it was up 2.4% from August. That's a significant increase. And when you look at October, it raised the overall growth forecast for the globe to 3.2% from 2.8 since Liberation Day. So what does that mean? That AI is having an impact. Why? Because Amazon, Google, Meta, Microsoft, NVIDIA are putting roughly $400 billion into AI expenditures domestically and globally. So when you think about that, AI is now impacting just about everybody in the world. And to give you some idea, right now, to provide some scale, U.S. represents about a quarter of global AI investments. That means the rest of the world is going to catch up with data centers and other things related to the success of AI. Why is this so important? Because ultimately, that means this idea of international stocks and maybe commodities and this rebuilding of the domestic and international grid along the lines for more power that's needed for data centers is real. And will AI impact our abilities out there? Sure. You're probably using it every day and not even realize it, whether it's the medical profession or basically any profession. But will we become significantly more efficient because of AI? And so far, we're seeing some of that. We are seeing folks use it pretty effectively. I know personally, I was dealing with a medical issue, nothing serious, some weird kind of headaches I was getting behind one eye. And I went through ChatGPT and I drilled it all down, and it sounded like just a mild migraine. I had to take vitamin B2, and it's pretty much gone away. So, I ended up going to a doctor to confirm it. But it was amazing what I could learn from my own personal health by using ChatGPT, just one of the many. So I do think it's quite fascinating that we're in this scenario that it does allow us to think about what our world is going to be like. And I do think it seems like on the surface, AI is going to boost global GDP. That seems to be pretty fair to say. AI related spending could be as much as 0.8 of total global spending. Excuse me, sorry about that. So it's an investment in the real economy. To me, it was really quite incredible that what you're thinking about now is that even though the Mag 7 make up roughly 40% of the S&P 500, we continue to have this scenario where even if we had a bear market, which is possible, I mean, that is about, and not plausible. We don't think that a bear market's coming. But you still have this incredible spending that's going to be supportive of a scenario where we have some sort of slowdown. That if AI is boosting spending by billions of dollars globally, even in a scenario where we have to be a bit more smart about how much we're spending on AI, because there's a lot of concerns about a bubble, I don't think you can slow this train down. That is having too much of an impact, whether it's managing workforces better or having a cleaner, I would say, kind of more effective way of managing a business because you're going to use technology to advance your productivity. I do think it is quite exceptional. So whether it's the one big beautiful bill or AI, 2026 is shaping up to be a fairly good year right now. Other than if we see the Federal Reserve continue to cut interest rates, it looks like Japan may have to cut some rates. Germany's on the precipice of a big spending bill. All these things will be supportive of a real significant, kind of growth moment for the globe. So I think I'm beginning to be more optimistic about 2026. I thought it would be an off year for markets. I still think we start the year tough because of valuations. We're not going to get into the year-end forecast yet. But so far, AI is having an impact. The consumer is very strong. There's opportunities in different markets besides just those large growth stocks. So it gives you other places to think about investing your money. Just some fun stuff. Retail sales came out last week. Just to top off all this data, I'm giving you a bit much. Retail sales were up 4.3% year over year. That's a great number. Again, the consumer hanging in there. And whether it's restaurant and bars category, so a bit of another solid 0.7 increase. I'm just making sure I get my notes right. September saw a 1% jump, and August as well. Where do people spend their money right now? They are spending it on services. And yet service inflation is only up 1.5% year over year, where goods inflation is up a bit higher. So what does that mean? That even though goods are up closer to 4%, most of the things we spend our money on is services. So that's really important. So retail sales doing quite well. Now gasoline can play a piece of that, but core retail sales, which take out food and energy as their primary component, increased also by 0.1 month over month. That's really important. And when you look at year over year, increased by 6.3%. That's a solid number. You really have incredible sales from the consumer. It's that time of year when sales should be strong. So all in all, really quite good. You put it all together, and I think next week we get some interesting data about what's happening with ISM and the labor market. But by and large, the consumer still being quite healthy. We also get PCE. PCE is an important one. Why does PCE matter? Personal consumption expenditures. I bring it up every month. We haven't had that data in a while. It's the one that the Federal Reserve cares about most. So that's one you want to keep a close eye on, because I think it does really matter in the end. That whether or not the Fed cuts interest rates is going to matter for markets. Whether we like it or not, it's going to matter for markets. That's just where we are. And I don't think that's changing anytime soon. Unfortunately, it's just not. Well, that wraps us up for this week. I would say, I think you got to be smart about not getting too nervous about markets here. So December tends to be a pretty darn good month. People put money back to work. There's a lot of tax loss harvesting that's going on, that kind of thing. But generally, we do have this scenario where I do think we could see December probably end up about here. If for it to go much higher would surprise me. I think that's unusual. I think that's a bit of a goof. I saw one more fun stat, that for this concern about a K-shaped recovery, where those who have the most wealth are making the most, those who have the least are making the least. Everybody did well. The people below, with the bottom 50%, have $4 trillion more today than they had pre-pandemic. Unfortunately, the top 50% have trillions more than that. Those who have assets did quite well. No doubt about it. But when you think about where we go from here, $1.4 trillion a year will begin to transfer from boomers to Gen Z just this year. And that number will increase every single year for the next 15 years. So there is going to be a tremendous wealth transfer. And I do think for now, there's going to be some anger that the folks at the bottom of the K, they're annoyed. There's no doubt about it. But wages are up. And I do think beyond that, they're going to inherit real money. And as they inherit that money, I think it's going to have growth in the U.S. economy, growth for them personally, and a shift from all the money being top heavy to somewhere else. Just something to think about. All right, it's time for my shout out of the week. First off, I'm going to have two this week. First one's Charlie Munger. I got a chance to do a lot of extensive reading on Charlie Munger. He was the co-CEO or partner of Warren Buffett at Berkshire Hathaway. Why I think that's such a cool thing is Warren Buffett today is still arguably the single smartest investor the United States has ever had. But he would have never gotten it done without Charlie Munger. Why I mentioned Charlie as my shout out? I didn't know this. Charlie was a really neat guy. He was very fond of helping people who couldn't find their way. Great story about a guy who couldn't figure out whether or not to go to college. So he sent him to as he put it, the Charlie Munger University and helped him get involved in real estate. Helping young people get interested in investing, which is a passion of mine, but also being forthright and pragmatic in a way that helped make Warren Buffett who he is, but also very beneficial to society, donating millions and billions of dollars, being a very philanthropic person, but not just with his money, but with his expertise. And that's why he's my shout out of the week. The second one, Gio Alfonso Chulo, Uncle Al. Uncle Al is the last of the great Mohicans. All the other old timers are now gone. Those at least used to come hunting with us on our annual hunting trip. And there he was last night, insisting that we all eat a bit more because we didn't eat enough. We all have an extra glass of wine because we probably didn't drink enough for him. He would have liked to stay a few more days, but the snow spooked my cousin also, and my cousin Angela also. He didn't get to stay a couple more days, but I might come back up for another weekend. So if I do, I'm going to bring Uncle Al with me. What makes him such a powerful person is that he was the kind of guy that wanted to simply help everybody. a bit like Charlie Munger, that he always found a way to give people a job in his family-run business, A&N Landscaping and Contracting. Gave good advice to people, loaned them money, but always was there to help, whether it was food or wisdom or love. He is a tireless worker, but he just loved being around friends and family, which is what makes him that classic, powerful Italian and any immigrant. That we love our families, whether it's Thanksgiving or Christmas or a hunting season with the guys. The love that you get from moments like that, the time that you spend together, they're uplifting, they're empowering. You feel better about yourself when you leave people like that because they showed us the way. So for that, Uncle Al is my shout out of the week. Have a great week, everybody. Look out for that Christmas tree being lit in New York City. Good data coming next week. And next week, we'll have some fun year-end wrap-up coming soon. Take care, everybody. Thank you very much. Bye-bye.